fallen apart. But investors are now saying that, look, 18 months of no return and with a visible slowdown in the near term, are we in for a tough patch for next couple of quarters?
Good morning, Nikunj, and thank you for inviting me. Yeah, I think what we are going through is a proper reset. I think in terms of interest rates moving up, in terms of quantitative tightening, and there is a fundamental reset which is going in the market, and that is reflected in the stock prices. Thankfully, at least our markets at least are holding out and broadly saying maybe 5% from the top. But so I think this reset is still in progress, and also if you look at the narrative in terms of inflation and accordingly interest rates, I think that narrative has not yet settled. What was supposed to be transitory has now become kind of stubborn, and so we are not at the end of the interest rate hiking cycle globally and accordingly in India. So I think from our market perspective, investors need to be very, very patient. In the next few quarters, yes, there could be disappointment. Growth doesn't justify. I think those companies or those stock prices would be still under pressure. But having said that, I think looks like investment versus capex. So I think the capex-oriented companies, consumption versus capex. So capex-oriented companies seem to be in a sweet spot as far as investor interest is concerned, and I would think so that they would continue to do well.
So, from a market standpoint and from a news standpoint, will it get bad before it gets better? And I'm referring to both the economic news, the earnings, and also the underlying stock prices.
I would say that it will be very, very volatile in terms of, I think there is no consistency as far as news flows are concerned. I think data keeps on changing and the narrative from central bankers accordingly keeps on changing. So I think volatility will be a given. And as I said earlier also, so volatility will be a given, and accordingly wherever valuations are not reflective of the fundamentals, I think those stocks will be under tremendous pressure. And also, as far as news flows are concerned, I think it's very difficult to say what can happen as far as the global scenario in terms of the Ukraine-Russia war. I think if some solutions are coming out of it, that could be a very big positive news. But as of now, it looks like that we should be prepared for slightly trending down kind of news flow rather than any massive uptick as far as global is concerned. And as far as local is concerned, I think this whole El Nino effect which could possibly come, I think that could be a dampener as far as local environment is concerned.
Right. So in light of your macro view on India and considering that you continue to remain in long-term bull KK, wanted to understand what your sectoral overweights and underweights are in this current market.
Valuations per se are concerned. So in that environment, it is very important that we are invested in companies where valuations are reasonable and not into companies where there could be 40 times and 50 times earnings 2 years forward. So those kind of valuations, companies could be under a massive derating possibilities of they getting derated massively. Now sectorally, it looks like that, as I said earlier, the capex cycle seems to be very strong. So companies, whether it is into power, whether it is EPC or manufacturing, etc. So that is one segment which will continue to deliver robust returns, including companies in EPC, cement. So that's one segment. And from a medium-term perspective, from a 3-year perspective, we believe that the whole manufacturing sector that has massive tailwinds as far as various government policies are concerned, as far as the whole China plus one, Europe plus one opportunity is concerned. So companies in that segment, they are going through a lot of capexes and they should deliver good returns. Yes, some of those companies in specialty chemicals, etc., have corrected, and maybe there could be some more sideways movement in many of these companies. But if investors are willing to invest from a 3 to 5 year perspective, I think the whole segment, including auto ancillaries, which are focused on exports, I think many of those companies will deliver very good returns. So this is one segment that you should be looking to add further in the coming months.
Would you steer clear from though?
See, as I said, I think wherever there is valuations are expensive. Now, instead of going sector specific, I think it would be very important that on a bottoms up basis, we are very clear that we are not investing into richly valued companies or where the expectations of earnings coming 3 years, 4 years down the line. Those kind of companies that you should avoid. And from an immediate next 6 to 12 months perspective, looks like domestic consumption still seems to be under pressure, and many of the companies in that segment seems to be expensive companies. It's about over ownership. So I think there we'll have to be very swiftly trading in and trading out of those stocks because over ownership is massive in that segment.
KK, does the kind of commentary that we've been getting from the new age tech companies now with respect to profitability, growing their businesses, reducing cash burn, inspire confidence?
Yes, I think we have already seen that in January we saw a massive, reasonable uptick in the valuations or the stock prices of many of these companies post their Q3 results and the commentary. My sense is that post their full year results in March, which will come in April, I think the indications that they give in terms of how the order flows or order conversions are happening, that should help investors become more sanguine and more confident about about these business prospects for these companies. So they are coming. I mean, the last 3 years have been very good for most of these companies in terms of growth. So growth, there is a definite slowdown which is expected, but then these are cash generating machines and they do well over the period. So my sense is that different high single digit returns is possible in many of these IT companies.
Okay.
Got a nice little rally in Adani stocks. You got a nice little rally which is coming back in some of the metal stocks today. Good comeback in some of the PSU banks. KK, I'm sure your global clients, your HNI clients, your domestic institutional investors, they must be sending you a WhatsApp or a message, or maybe they must be calling on your landline to figure out, KK, what do you make of the Adani saga? The Adani of stocks, the Adani saga, the impact of that on the companies.
I think the challenge is. So, I mean, yes, it has been a month since this whole episode has opened up, and as you can see, I think there was a lot of fear on the whole banking system, possible impacts, and maybe derivative 2, derivative 3 impacts on other stocks. My sense is that all that is possibly behind us, and I think it's now becoming business as usual because I'm sure regulatory agencies will come out with various reports on whatever questions have been raised by the global research house. So I think investors are now back to looking at individual stock fundamentals and trying to take decisions rather than worrying about the
on lenders. As of now, there is no loan default, whether it's LIC or State Bank of India. They've come out and they've said that we have no challenges whatsoever because the Adani group of companies, they're still standard account. What is your understanding of the impact it could have on the lenders per se?
No, as you rightly said, I mean, there should not be any impact because I think all the lenders, if you look at the presentations also by the group, I think 70% 80% of their borrowings is from global entities. So the local entities, the lending itself is very, very limited, and most of the businesses have sufficient cash flows to be able to service their obligations. What can possibly impact the ecosystem could be in future there may be challenges to borrow, and that could impact their growth plans. But as far as lenders are concerned, I think it's a more ghost which the investors have created. I think local lenders have been very sharp in their underwriting standards over the last many years, and I don't think so any lender has any massive over leverage, over exposure for them to worry. So I think the stock price correction which have happened in the local lenders is more a function of over ownership and the general market sentiment. And I think once the Q4 numbers come out, and maybe I think that things should pick up. So domestic lenders, I don't think so we should factor then this as a reason to worry about as far as investing is concerned.
Right, okay.